I cashed out. I told him cash back to my account. Boom. I ended up getting like 350 total, and it'll turn into free vacations, free flights, free hotels. Demand control of your life by injecting financial literacy upon your life with this wonderful podcast about building and utilizing credit. We will discuss what credit is, our strategies for building and maintaining credit, the best credit cards and loans out today and their benefits, and how you can use credit to your advantage.
Credit is what the country or the systems use to judge you financially on how well you manage money, how well you use money, things like that. The reason it's important is, it gets you lower rates on a lot of the things that you're doing, such as loan products, credit cards, HELOCs, anything that's got an interest payment on it, any kind of interest on it, you can get that lower by having a better credit score and a better credit profile. You can also get things like free travel. So with one of my cards that I got right here, this is called the Sapphire Preferred Card. It gets you a lot of travel benefits, such as 5x back on travel points, 3x back on all dining places, 3x back on groceries, and then 1x back on all other purchases. It also came up with an 80,000 point sign-up bonus, which in the Chase Travel Portal is worth about $1,000 worth of travel points.
That's crazy.
Free travel, $1,000, you know what I'm saying? So yeah, get you some free travel. The next one I like, again, with the Sapphire Preferred Card that I got, it's made out of metal. You know what that means? You drop that on the table, it's gonna have a nice ting to it, you know what I'm saying? This one made out of a little bit of composite, but it's cool, you know what I'm saying? It's cool. It got the nice metal to it. It's that good stuff that you like, you want to have. It comes along with the metal cards, and you get them bragging rights. You know what I'm saying? You got good credit. You talk to everybody about it.
Apple Card got that too. You slam that down.
Bing! Yeah, it sounds great. I'm telling you, it sounds great. And then with some other cards you can get, such as like business cards, there's also some personal zero ARP cards, but that's really free investable money for you guys. You know what I'm saying? You can take that money that you get with zero ARP and you can invest that into something that's going to make you more money and pay those credit cards off within a year. And basically get that asset for free using other people's money. So there's a couple ways you can use credit to boost your lifestyle and income.
Basically, credit is a lending institution that is extending funds or resources to you, a borrower, based on the expectation that the borrower will pay their debt at a later date. Basically, credit gives you access to funds for starting a business, purchasing a car or home, or investing in your education. You can get whatever you want as long as you have a plan and can present it in a way that can justify the amount you need to the lender. If you can come up with a plan, a business plan, and everything that you need, and you can justify why you need $50,000, then there's a way that you can attain that.
I'm actually going to put you guys on today to a couple strategies that you can use to actually get loan and credit products without using any of your personal information. You could do it without a credit check. You could do it without your social security. All you're going to have to use is your EIN, operating agreement, and your articles of organization. You take all those and your DUNS number. You take those to the bank, whatever bank you bank with. You could get most credit cards without any kind of personal guarantee or personal credit check.
Getting those credit cards, it helps you build assets too. You can acquire equipment or property to enhance your business operations and increase your value. Also, credit can help you in times of need, like with your cash flow. It helps manage the cash flow fluctuations that you have during temporary financial challenges. It provides a buffer for allowing a business to maintain their operations and meet their financial obligations while in difficult times. So like, for example, with this podcast, it's a weird example, but I loaned myself a few $1,000s to start this. The operating cost for my podcast is around $100 a month, and sleepless nights, of course, but that's another story. So yeah, my business is not profitable yet, but I am still able to keep it going because of the credit myself as the lender has offered to the business. So even though I'm going through trials and tribulations right now, I'm going through a rough time, it's not profitable, I'm still able to run because of the credit that I gave myself. Now, that's a different situation than the actual credit lender, but it's kind of like just to open up your mind on what exactly does it mean for a lender to, let you borrow money.
The way he said with an example is cost you $100 a month, and with credit, you can survive with that. There's tons of other businesses such as real estate, like say you need to pay rent, you're behind. When it comes to credit, it's a monthly revolving account, so you get that money every single month no matter what. If you pay it off, you could use it for businesses that have inventory, so like clothing brands, e-commerce stores, things like that. And if you're not making the money that you need to make, again, you have that credit to continue to flow, put out orders, order new inventory, things like that. Say you have a dry month or two, and then you pick it up, and the next month after that, you barely even made a stumble. You got that credit to back you up the same way, you know what I'm saying? It backed him up whenever he needed it,
Yeah, credit is definitely a life support. It's like that extra resource that you have that can help you. As long as you know that in the end goal, this business will be profitable, this business will make money, I will have good months, then credit can help you during the bad months. As long as you're running a business that you believe in, that you know that will grow, that you're putting your heart, mind, and soul into, you should believe in yourself and your abilities to be able to run that business. So credit can definitely help you in times of need.
Y'all should keep that in mind, definitely for just business purposes only, to be completely honest with y'all. When it comes to personal side, y'all most of the time want to pay that completely off. If you don't have the money in your checking account to pay it off, do not spend it on your credit card.
With personal credit, do not spend anything on your credit card that you cannot pay at the end of the month. I know the credit card is saying, hey, you can spend $2,000 and just pay it off over a course of a year. But when you do that, you're acquiring interest through every month. If you take the strategy that you're only going to use your credit card for the things that you already buy and the things that you know that you're going to pay off at the end of the month, then you're not going to pay interest. And that's the biggest thing with credit for personal use. For business use, paying interest can be justified because you're still making a profit. But for personal use, don't get caught up in the wave of, oh, I'm going to use my credit card, swipe until I max it out and to just make monthly payments. Because no, first of all, it just hurts your credit because, you're putting yourself in a hole. So don't put yourself in that hole. Only use credit for what you know you can pay off at the end of the month. If I swipe a card, I'll try to pay it as soon as I can, you know what I mean? And I only swipe my card for an amount that I already have in my bank account at that existing moment, which is different when you're using it for business.
If you don't got it in your bank account, your checking account, don't spend it. If you got it in your savings account, don't spend it. Don't waste your savings on something that you don't need. If you got money in your checkings account, you can pay that whatever you paid for off, pay it off. If it's business, it's a 0 APR card. You should be fine for a few months until you get everything going again, and then you can, start putting money back into that card so you're not catching interest at the end of the year, or you could just, use it and pay it off as you go because you're, bringing in revenue each month. So.
Facts. So what would you say your strategy is for building and maintaining credit from the beginning?
I'm sure you have your own list of beginner-friendly cards, and I'm sure a lot of people already do. But I have one specific card that I think every single person should get. Everybody should have it in their wallet. It's called a Discover It credit card.
I got that too, yeah.
Fire credit card, dude. I'm telling
Great.
you, bro. So they got 5% rotating categories. Every 3 months, basically, they change the categories of what you spend money on and get 5x points back on. This 3 months is digital wallets and gas stations. So if I get gas at any gas station, I get 5% off on whatever I'm paying for, essentially because I got 5% back on that cash. You feel me? And then same thing with digital wallet. This is like Apple Pay. Anything I use Apple Pay with that card, that Discover card, if I use it on Apple Pay, that's going to give me my 5x points on mostly anything. So say I go to the gas station and, I want to go inside and get a drink as well with the gas. I got 5x points on that drink as well. You feel me? It's got a good couple benefits with it. It's also got a $200 welcome bonus, I believe it is. So you spend $500, you get $200 off your statement. So it's got a decent little card. They start you off. The user interface for the app is extremely easy to guide through. Customer service, they're just amazing. They will help you out with anything you need to get done, and they're definitely there for you.
Yeah, and there's a lot of credit cards that offer things like that. For example, the Wells Fargo Active Cash Card. It's only 2% cash back. It does have rotating deals where you can get 5% cash back if you go to this store in this specific season. One thing that I like about that is in the first 3 months, if you spend over $800, you automatically get, it's either $200 or $250 in rewards back. So if you use that $800 for rent, boom, you get that $200, $250 back in rewards, and it can go straight to your account as cash back, or you can let your rewards build up and it'll turn into free vacations, free flights, free hotels. I've seen where someone got a free MacBook Pro off of it. You know what I mean? So
I think I actually saw that video. I won't lie to you. I think I saw that video. I like to say when you guys go through these phases where you're going to get these nice cards and they've got a lot of benefits and things like that, you're going to get these points. I think over this last year, I've only gotten like 24,000 points for spending, I think it was like $48,000 or something like that. But 24,000 points only translates to like $250. So honestly, use these points for like statement credits, use it to like buy on Amazon stuff. They have like restaurant deals you can do. do. If you have certain credit cards, you can, you go to restaurants for free if you have the points to do so.
I like to agree to disagree with you. It depends, honestly, because it does build up, but it's not the most significant if you're getting 2% cash back on everything. Because let's say you spend $10,000, that might translate to $200 if you're getting 2% cash back. But I think over this past year, I have about 7 credit cards. I probably spent about $25,000 on my credit cards. I believe I got around $350 back because I just went through, I cashed out. I told them cash back to my account. Boom. I ended up getting like $350 total. And it's been like a year since I've cashed out all my rewards. So it was a decent little boost. It's not the completely biggest if you're not using it for credit or if you're not spending, 100, 200,000 a year. Because when you're spending 100, 200,000 a year and you're getting 1 to 5% cash back, you're getting thousands of dollars back. That is different. The more you spend, the more your rewards are. So if you are only using your credit card for $200-$300 a year, you might not get a significant amount back. You might just get a few dollars, but you're still getting that money back and it's building up.
I definitely still agree with you on that. I definitely think we see similar points on the fact that points are going to build up over time.
Yeah.
And you could definitely use them for a lot of things that are going to help you out in the future.
Definitely.
The next credit card I want to talk about in this podcast is going to be something from a special bank. It is called Green State Credit Union. You guys need to have one of these in your bank account. A credit union is so good when it comes to having bank accounts. Not only does it look good on your personal credit profile, but credit unions tend to give out the lowest rates and the highest amounts of money. So you could get a $15,000 credit card at a 20% annual percentage interest rate. So you pay that minimum payment. It's got 20% interest instead of you going to like Chase where it's got almost 30% interest and then you're paying 30% interest on a late payment if that's how you pay your credit cards, which I highly advise you don't do. If you plan on getting any kind of car, any kind of house, any kind of loan product anytime soon, I would heavily advise going to a local credit union, building a relationship with them to get some low rates on anything you're getting ready to do with a loan product.
What would you say the difference between a credit union and just like Chase? What's the difference between those?
The friendliness, really just the friendliness, the benefits that they have. Chase is a big commercial bank. So, they're not as customer oriented. They're more money oriented. You know what I'm saying? And in credit unions, the main source of their money is their customers.
And they're more local, would you say?
Yeah. My whole family's involved in my credit union. So my grandfather, my mom, my uncle, my little brother, my grandma, my aunts, we're all in the same credit union, which gives us a huge boost. We're all in a funded account and we all put a certain amount of money towards that funded account each month. And then we use that money each month to invest into somebody else's journey in our family. Like last month, we helped my uncle continue his firefighting journey. So he basically wanted to become the captain of a firefighting company, I guess, in Kansas City. I think he was the chief before, because I think he's chief and then captain, or captain then chief, but it was one of the two. And we basically just, piled in about $200 a piece between like 7 different people, 7 different families. It was kind of like a group of people, but we piled in about $1,400, $1,500 for him and paid his school off pretty quick. So
that's clutch.
But yeah, it's pretty decent. Credit unions allow you to do something like that, as well as the lower rates and a lot friendlier people, to be completely honest with you. You could find customer service and get a lot of things handled in 15 minutes with a credit union, where it's going to take you maybe 30, 45 minutes to an hour and a half just to get onto the phone with somebody at a Chase, help desk. So
look at the local credit unions, do a little bit of research, go in, talk to them, see if that's an environment where you would want to further your business or credit adventures in.
If you're in the military, a fire place to go to get some good credit, Navy Federal. They are specifically for military members. If you guys are in the military, do not shy away from that company. They're trying to give you everything. They're just trying to give everything to you guys, for real. Just hop in there. They'll give you some good products and you guys will walk away with a little extra cash in your pocket.
When you're going into credit, starting to actually build, work, maintain on your credit, if you see anything on your credit that's not supposed to be there, or if you see something that is incorrectly charged on your account, then you need to dispute that to the 3 credit unions. Doing that, you can find an outline online, basically just letting them know that, hey, this should not be on my credit, You'll send it out to the credit unions and they'll get back to you. Might take a little while, but they should be able to get back to you and work with you on that issue.
When you dispute credit, when you dispute those inquiries, you want to make sure that they're not attached to any kind of account, because if you do get an inquiry that is attached to an account deleted, that account will also get deleted with it. So the same way I opened up my Discover 8 card, it was my very first card around 2-3 years ago. If I just close that right now, if I dispute the inquiry that it gave me, actually, I think it fell off because it's been so long ago, but if it was still on my account and I decided to dispute it, it would cancel out my account and it would take a huge hit to my credit report. It'd probably drop my report about 100 points.
And that's because your credit history is also important as well. So the average amount that you've had credit.
They take your first one and then they just kind of average it out from that point. So say you've had your first one for 4 years and then the time that you got your last one, they're going to average out those ones.
Basically, the credit cards that you've had for the longest are your longest lines of credit, and you want to keep those because those benefit your credit score. And if you get something like that knocked off your credit, it just decreases your credit history. Your credit score will take a hit for that.
A quick hack that I learned not too long ago, I think it was about a week ago, with your credit card accounts, as long as you keep your first and most recent credit cards that you've opened open, anything in between you can close and it won't have any effect on your account without like age, derogatories, count size, any of that. It won't drop any of your points. It's a really cool hack that I learned. So if you decide you want to get a card that has a $0 annual fee and you just want to, you know, get the sign up bonus for that and then close the card after, you get that card, you get your sign up bonus, you get another card, then you cancel it. It has no effect on your credit report. You just spent $500 for $300.
As long as you're going for cards with no yearly fee, because that's my pet peeve. Unless if you're getting an American Express card and that has crazy benefits and you're using it for business and you're spending a lot of money on there, making a lot of money, then it makes sense. But try to go for cards that don't have that yearly fee, because now I'm sitting on 7 credit cards and it costs me nothing, as opposed to if they had 5 to $100 yearly fees. Now I'm paying to use credit. So I would only pay for credit cards if it's for business and if your business proves to be profitable enough for that. Like the American Express cards, they have many benefits, but is it really worth $500 a year?
So I'm gonna definitely have to agree to disagree with you on this one. This is gonna be one of those for me. So specifically in this example, my Sapphire Preferred card, it has a $95 annual fee, but there's a lot of benefits that come with that. So it's a travel card. So not only do I get a lot of points back on travel cards or on travel points, but I also get things like I get a $50 hotel credit each year. I get a 10% bonus on all my points at my year anniversary. I got my 80,000 point sign-on bonus. I got free DoorDash pass for a year. I got I got a food credit for a restaurant. I think it was like $20.
But still, it comes with all those benefits. And if you utilize those benefits, then paying that monthly fee or yearly fee is justified.
Yeah, if you use the benefits that the card gives you, then I definitely think that the annual fee is justified. But like specifically for like Amex cards, like they're specifically travel cards. So if you get a gold or a platinum card and you're not moving around, you're not traveling, there's really no point in you having that $250 annual fee, $400. I definitely would agree, on that part. If you tend to use points on small things, so like for example, I took a Chicago trip just because of this Sapphire Preferred card. So with the entry bonus, it gave me $1,000. So I went up there and spent $1,000 on a hotel, nice food. The Amtrak ride up there, I actually spent money on the credit card so I could get 5% back instead of just a 5% or just a free ride. It's got a lot of everyday purchases that I use on it. So like it's also got 3% back on streaming services. So I use it on most of my streaming services, Disney Plus, Hulu, all that stuff. It's really good for that. Again, it's got dining on 3x points on dining, 5x points on travel, and then again, it's got 1 everywhere else. There's only 3-4 cards that I advise that you get with annual fees, and those are any of the Sapphire cards offered by Chase and any of the Amex Gold or Platinum cards. In order to you be using the Amex ones, you need to be traveling a lot for sure. If you're looking for everyday use, just to try to get some good points and get a good build up going, any of the Sapphire cards would be good for you. I just want to talk to you guys about something. It's called the Chase Trifecta. So basically you have 3 cards within the Chase family that give you monstrous benefits. So specifically, let me give you my examples, right? Again, so my Sapphire Preferred, it's got my 5x for my travel, it's got my 3x for my restaurants, it's got my 3x for my grocery stores, and it's got my 3x for my streaming services. That's a lot of everyday purchases out the way. My Freedom Flex, the best thing about that one, obviously I had a sign-on bonus, but the best thing about that is it gets a 1.5% cash back on everything. So it's just, a little extra bit than the other one. So that's my everyday purchase card. Sorry, the Freedom Flex is 5% rotating categories. That's the same as the Discover card. It's the 5%. And then my Business Unlimited card, Business Inc. Unlimited, that's the 1.5. Any of the unlimited products that you get from Chase are going to have that 1.5x boost on everyday purchases. These together cover almost everything that I can pay for. And when you open up one of the Sapphire or Unlimited products with Chase, they open up the ability for you to use something called the Chase Travel Portal. That's when things get real cool. So say I earn 4,000 points on one card, 8,000 points on another, and 20,000 points on another after that. I can combine all of those points onto one specific card and use them for something big instead of having to use them all separately for individual things. And that's just what you get with, opening up that last card, that Sapphire Preferred card after you got those other two cards set up. That Chase Trifecta is something that could carry you into your 50s, 60s, 70s without any other card.
Also, when you're going for these cards, you have to build your credit worthiness. You have to use your credit responsibly, show them that you can use your credit responsibly, and only use it on things that you are already gonna buy. Pay off your credit cards as soon as you can, definitely before the due date. Do not make late payments because that's detrimental to your credit. And make all your payments. Don't miss payments. For personal, make all your payments. Do not use your, that's how everyone messes up their credit. Everyone will come to me, I'm like, look at your payment history. Your payment history is messed up. You maxed out your credit cards. Of course, nobody's gonna extend credit to you. Of course, your credit score is not gonna be above a 700. Use your credit card for your daily expenses, not anything that you can't pay off in full before the payments due. That's how you avoid paying interest and keeping your payment history high. Just apply for new credit lines every once in a while. Don't apply for 3 credit cards in one night. Sometimes you'll get it.
Got a hack for that too. I got a hack for that.
Okay, what's the hack for that?
All right, Pete. So you can apply for multiple credit cards within a certain span. It also depends on like what you get approved for. So if you get approved for a credit card, you're automatically going to get an inquiry no matter what. But if you apply for 3 different cards and you don't get those 3 cards, you can dispute 2 of those. Like we were talking about earlier, you can dispute 2 of those. And then on the business side, since nothing reports from the business side to your personal account, what they do is you can go to different banks that report to different reporting companies. So you know how they have the 3 reporting companies. There's Dun & Bradstreet for business. There's Dun & Bradstreet, Equifax, and TransUnion. You can go to a bank that only reports to one of those, and you could get 3 different credit cards with 3 different banks and only have 1 inquiry on each single report. But yeah, that's a fire tactic that a lot of people that I've seen in my kind of field when it comes to the credit thing, they'll pull 3-4 cards from different, credit bureaus, and they'll pull together around $7,500, $150,000 to do something.
That's crazy, especially for, with those business lines of credit give you an insane amount, especially if you're using it responsibly and you do have a business to back that up.
Yeah, if your personal credit looks pretty good and I'm just saying, if you're not making any money with the business, but your personal credit looks pretty good, there's a high probability you'll get a decently, sized account with this credit card or whatever it is that you're trying to get. There's a good chance even though you don't have money coming through this business.
What are some loan opportunities out today that credit can open up for you?
Having a higher credit score, puts you in these different brackets that offer you lower rates for certain things. FHA loans are really for kind of people that have, lesser credit. Anybody who's kind of 640, between 640 and 680 kind of thing, beginner credit. Those are the people that are going to look for the FHA loans. Those are the people that are going to get approved from a lot easier than other people. If you want to do 3.5% and you've got a good credit profile, just go with a regular standard 3.5 conventional, because they are around. There are programs that allow you to do 3.5% on conventional. You can do 10%, 5%, 20%, but most conventional loans are 20% just because that's conventional. They also have VA loans. So VA loans are for veterans. Specifically for veterans. Again, for you veterans out there, you military people, they're going to be a lot lower rates than anywhere else you're going to see. Those VA loans are going to help you get to the next place that you want to be. They can get you that house. They can get you that Hellcat. They can get you whatever you want from the military just because you were in the military. And the VA loan is specifically for military people. Like, nobody else can use those unless you have a military background. USDA loans, those are higher credit people. If you have, I think it's a 720 average and above, those are the type of loans you're going to want to look for. Besides conventional, always go with a conventional if you have the right circumstances, because conventionals are the easiest to deal with. They're the easiest to close out on. They're going to take the least amount of time. So what USDA loans, they basically auto qualify you for a certain amount of money for help on down payment assistance without you actually having to apply for it. And instead of you getting this down payment assistance money, you just get money taken off of the total purchase of the property. So that's pretty cool about the loans. And then grants, like I got a $10,000 grant and a $6,000 grant for the house I just purchased. Without those grants, I don't think I would have been able to afford the amount of house. The house is a $160,000 house. I only had around 10 grand to pay for it. So that's less than 10%. So, and these guys are looking for anywhere from 15 to 20%. And remember, you guys, I also have PMI. So each month on top of the mortgage, the insurance, the property taxes,
Maintenance, utilities.
yeah, maintenance, repairs, things like that, I have to pay PMI as well. So that's just another bill that you're going to have to worry about tacking on when you pay under 20% on any kind of loan product. So keep that in mind whenever you guys go shopping for under 20%, loan products and stuff like that.
All right, so what are some other credit cards that you would recommend for specific credit scores?
I like to categorize my credit scores as, it's going to kind of sound pretty harsh and blunt, but anybody who's got a 500 through a 640, you just got a bad credit score, bro. Like you got to do something, bro. You got to figure that out, bro. I don't know what to tell you because that's pretty low. I like to say beginners are anywhere from 640 to 680. That's kind of
fair.
Kind of where I see a lot of people kind of stuck at in the beginning where they don't know what to do or don't know where to go. And for those people that got decent credit and bad credit, there's a specific card out there that you can get. It's called the Built credit card. This credit card is absolutely fire for people that don't have a lot of money coming in, don't have a good credit score. Because what it allows you to do is it allows you to pay your rent on this credit card. But what does it do? Because you're paying rent on a credit card, it boosts your credit score crazy. I've seen some people online. I've seen some of my friends that got this card that have gone up anywhere from 40 to 90 points just because they paid 2 months of rent on this card. It's a huge boost. It's a great tool that you guys could look into if you guys are looking to build some good credit, personal credit. It also has a ton of benefits like cashback rewards points and other credits, small credits like GoPuff, things like that, like $10 GoPuff credit. I think it's like a $50 Uber Eats or something like that credit. But yeah, the best part, you can use it for rent. So it's going to boost your score whenever you pay your rent on that card. So that's a really easy way to boost your credit score. Again, back to that Discover It card. I'm never going to give up on it. That card it's just amazing, man. You guys get so many rewards right out the gate, and the app is so clean and easy to maneuver through. You get so much help anytime you need something. It's a really, really good beginner card for a lot of people trying to build their card on just everyday purchases. It's a really good one in my opinion. What about you, my boy?
Yeah, definitely the Discover It was my first card. I also applied for an Amazon store card because I know I use Amazon for pretty much all of my online purchases. When I'm looking for stuff to buy or whenever I'm making investments, Amazon is definitely the website that I go to. So Amazon store card makes sense for me to get. I ended up getting that. They gave me a $1,500 credit line, which is pretty decent.
Ooh,
Yeah.
that's fire.
Yeah.
Like right out the gates?
Yeah, right off the
Oh,
gate.
dude, that's fire, guys. My first credit card that I got, the first limit was like $500.
I forgot what it's called, but my dad had put me on his credit card. His
Authorized
Capital.
user.
Yeah, I was an authorized user at the age of 15. So,
Oh, worse. So
or
you
it was
some
like
good
15,
credit
16.
popping out, huh?
Yeah. So I popped out with like
Do that for y'all
700
kids,
credit.
yo. When y'all have kids in the future and stuff like that,
Set them up.
set them up. Make them an AU, give them a little credit card for their birthday or something like that. Make it like a low amount, just whatever it wants to be, and make them an authorized user. That would boost their credit by the time they eat. You probably wouldn't even need to have a savings account for the kids for college because they've got so much built up in credit, they could qualify for really cheap student debt.
If you got kids, put them as an AU and put them on your card. Whether it's $300, they're still building up that credit. And when they turn 18 and they actually get to see their credit score, it's going to be insane. So one of the other ones I started out with was the Chase Freedom student card. Now, this is for college students in specific. So, you know what I mean? It has many benefits. It's also 3 to 5% cash back depending on what you're getting. So it's definitely a really good card to get. And they ended up giving me $2,000. So after the first few cards, I got the Citibank's custom cash card, which also provides around 3% cash back for stuff. And it also has different things,
Like
the
more
revolving
credits.
deals with the stores per season, stuff like that for more off credit. And they actually gave me 3.3K at the age of, I was 19. So at 19 years old, they gave me a $3,300 credit card limit. With a lot of these cards, you don't have to specifically have a salary or make a lot of money for these cards, especially if you're handling your credit responsibly. Now, you will get to a certain amount. Like I've reached where now a lot of cards are asking for how much money do you make, because they're not going to extend out $30,000 in credit if I'm making $30,000 a year.
Exactly.
So yeah, so you will get to a point where you will have to show proof of income of how much you make, and that will kind of like not determine, but some credit companies will look at that and decide, okay, are we going to extend out credit to this person? Also, yeah, the Wells Fargo Active Cash card was pretty decent. The Apple card was decent. I actually got denied for it at first, and I applied for it again. I got denied, and I waited like a year and I ended up finally getting it.
Really?
Yeah.
Oh, wow. Yeah, I need to get that card, dude. It's a nice card.
Yeah, and then you get a certain amount cash back for using the card, and then you also get a higher percent cash back if you're using Apple Pay on it. And there's a lot of other deals and stuff on there. And the cash back goes straight to your Apple wallet.
Oh, really?
Yeah,
too?
like it's for everything. It just so you might look up
As
your
soon as
Apple.
you swipe, you up $5.
Yeah, it's straight in your Apple Cash. Actually.
No, that's definitely a move. There's a few different cards I think that are pretty decent. I think these Citibank products are really good for like beginner people starting off credit. And again, guys, I'm 19. You know, I've got around $36,000 in personal credit and about $10,000 in business credit available to me at this moment. So this is not impossible for y'all to do. This is something easy for anybody they can do. Anybody older than me, you guys could start this right now, tonight, today. You could get this done. Matter of fact, right now, go to Discover, apply for a credit card. Right now. You
need to get started now. That's the main thing. Get started now. Build that credit history. Show these lenders that you can handle this amount responsibly, and they're just going to keep feeding you more. And also, when you have credit cards, they can automatically increase your limit if you're using it responsibly, or you can request a limit increase. And that's what I've did on both sides. And like, for example, my Chase Freedom student card, I think it started out at like 500 or 1,000 or something like that. Already boosted 2,000. Wells Fargo active cash card started out at 1,000, and I think it actually just went up to 2,500 or something like that right now. But your credit limits will increase if you just handle it responsibly.
Another thing, just to kind of add on to that, you guys don't want to be requesting these limits to increase your limit all the time, because some credit card companies will actually hard pull your credit profile to see if you can get a credit increase. I know specifically Chase does it. My credit union does it. There are certain companies that will do a hard pull on your credit if you do a request to increase your credit limit on a specific card or anything like that they got.
Yeah, and you do want to watch out for those hard inquiries, because those will decrease your credit if you have so much in a certain period of time, but they always fall off over a certain amount of time.
When you guys get those hard inquiries, there are certain specific companies like Amex, Chase, Citibank. Those companies have something called the 524 rule. Basically, what that means is if you've applied and been approved for 5 or more credit cards within the last 24 months, they will automatically deny you access to whatever you're applying for. So you guys got to be wary for that. You can't just be applying all types of things. You got to make sure you fit that 5 and 24 rule. Those inquiries do fall off after 2 years. They won't affect your profile up until about a year. So you'll be about a year out from getting it, and it'll stop affecting your profile. But it takes 2 total years for the inquiry to fall off of your actual profile for it to be non-visible to like lenders and things like that.
And having all these credit cards, it's honestly not a lot to manage. I put different bills on different cards. One card got car insurance, one card for food, one card for gas. You might have 7 different cards and you just use every different card for, different things. And then every few days or at the end of the month, you just log onto the accounts, pay them off. Boom, boom, boom. And it's not a lot to manage.
No, that's one of the reasons that I actually got the Chase Trifecta that I talk about. I love it so much just because most of my everyday purchases are in one area. They're all in one app. They're all in one spot. I can find them all. It's really seamless and easy. I mean, it's the same thing when you get like an Amex card or something like that. When you combine these cards from one specific company to use on everyday purchases, managing credit cards and managing the money that you have becomes so much easier, and it becomes less of a task and more of a hobby. I definitely view credit as a hobby more than like a liability or something that takes time away from my life that I don't enjoy. I like credit a lot. I enjoy the benefits that it gives out and things you can do with it.
And it's very rewarding personally, just building it up and knowing that you accomplished something, knowing that you went and took a trash credit score and built up all this credit, built up your credit score. And I mean, it's just a confidence boost as well.
Cleaning up your credit is definitely something that's going to boost your mentality. It's like working out. When you keep building, it's going to make you feel better and better about yourself. One thing about those disputes that you guys want to do, you guys can also dispute for things like a collections payment on like some from medical. You could dispute that off. If you were to get a late payment, you could, or a delinquency. So a delinquency is when you haven't paid your account late for a certain amount of time. They'll make that a derogatory mark. Bankruptcy, things like that. A lot of those, because of what's known as the Fair Crediting Act, you can actually get disputed off your account within 14 days, I believe it is, after you send your dispute letter. But yeah, just make sure you guys aren't, deleting inquiries that are attached to accounts, and you guys will be totally fine. Clean that credit profile right up. Real easy.
Yes, sir. Yes, sir. So what opportunities does having a high credit score open for you?
So on the personal side, there's really only two benefits that I view it as, because a lot of personal credit has interest. And when I'm thinking credit, I like to think about not having any interest on my money. I like spending money for free. You know what I'm saying?
Yep.
On the personal side, higher limits equals lower utilization, even in higher spending periods. So say you got $100,000 in, credit cards, and 1 month you spend $1,000, you're at 1% utilization. But the next month you decide to spend 10,000, you're still at 10%. You're not going to go up 30, 40% because you spent, these extra couple $1,000, and your credit score is not going to, really be affected by that. So that's a big boost of having some really nice high limits. Another one on top of that is they make your profile look good. You want to look really good towards lenders. When a lender looks at your profile, you want them to be like, oh yeah, and then just pass it on. Like, you don't even want them to think about it. You don't even want them to think about it. Like,
take this money.
You feel me? You just want them to give it to you. You just want to walk out of that thing real quick, real easy. Having higher limits is definitely going to make that profile look really good and stand out in front of a lender. Credit unions as well, they give out higher limits, and lower rates, again, I say. So if you're going out to, you want to get a high limit personal credit card, you slide out to a credit union. They'll give you a higher limit than, whatever Chase is offering or whatever somebody else is going to offer you.
And yeah, having higher credit gives you better rates and opportunities for home, car, and business loans. When you have a higher credit limit, your credit utilization is very important as well. Everyone has a different number. For me personally, I don't want to utilize over 10% of my credit. Usually online, it'll say about 20%, but I don't like to utilize over 10% of my credit. So if I got $20,000 in credit, I don't want to use over $2,000 in credit, because they give credit to people who can show that they can use it effectively, and also they'll give you more credit if you use less of it. It's weird. Because it might be because if you have $20,000 in credit and you're using $20,000 every month, then it kind of shows that they're, you know what I mean?
They want to see that you're not tempted to use all the money that they're giving you out in one little spurt.
That's exactly. They want to see that you're not tempted to use the full max limit. You know what I mean? So
they want to know you're responsible. They want to know you're responsible.
You hit it on the dot.
I definitely agree with that. There's a lot of things that you could do with, again, having these high limits, and the opportunities, again, like he said, for home, car, and business loans, they're really just endless. And having this kind of money, again, when it comes to utilization, the way I view it is I like to, again, what he said, 10% is going to keep you where you're at. 10% is going to boost you up 2 or 3 points every single month. It's not going to keep you negative. It's going to keep you right. My goal for a lot of people that I tend to help with their credit, I tell them to stay under 6%. 6% is going to give you a humongous boost. They know you're not using too much and you're not using too little. I personally think 10%, again, that's the perfect amount if you want to just kind of stay right where you're at. You want to keep things moving, go up a few points here and there a month, you know what I'm saying? But if you got that low credit, you got that low 700, you got that high 680, something like that, and you want to get your points up real easy like that, if you keep anywhere from a 1 to 6% utilization rate, your score is going to boost within the next 2 months for sure.
Yeah, I didn't even know that. I just
There's a lot of things you could do, for real. There's a lot you could do with this credit stuff. I mean, it's really powerful, and I use it to leverage debt all the time. Leveraging your credit and debt with your business and real estate is something that a lot of people do in this new modern day age. You see all these millionaires are like, oh, how'd they get there so fast? How'd they do this? How'd they do that? Well, there's only one of two ways. They leveraged something or they blew up. There's really only two ways.
Or rich parents.
That works too. That one works too. And you got that, small loan of $1 million. That's going to help you get places. You know what I'm saying?
Like Donald Trump.
Yeah. But yeah, a few ways you can do a lot of that. Leveraging is, there's something called, again, I've been talking about it this entire time. It's called zero ARP hack. So basically what you will do is you'll go to these businesses that have zero APR. And basically that means they have the zero annual percentage rating. So there's zero interest for an entire year on anything that you purchase. Granted, don't forget this part, because a lot of people think that you're just taking this money and then you get to pay it back a year later. You have to make the minimum payments. If you don't make the minimum payments for longer than 60 days, or you're more than 60 days late on a payment, they will go out for delinquency and they will report it to your personal credit. So make sure you're always paying that minimum payment no matter how much it is. You know what I'm saying? And that's the zero APR hack. A few businesses you could start with that. For example, there's 2 cards that you could get. It's one of my favorite banks in the world. It's called NASA Federal. It's not just a military credit union, but it's an all-round national credit union. They do really good. They're giving out the bag right now. Basically what they're doing right now is they're offering 2 cards cards, one personal, one business, and both are 0 APR credit cards. And depending on, whatever your credit profile is, you could get up to $50,000 per card. Say you get two $50,000 cards, that's $100,000. You can liquidate that and put that down on something like, I was talking to a guy the other day, he was talking about buying storage units. You could buy $1 million storage facility for $100,000 down and get that paid off within 3 weeks if you get it all set up right. Airbnb, that's another good one.
Yeah, Airbnb's been going crazy.
Dude, I've seen so many people, like a specific category of it that I really want to get into, like in the next few years, is like clinician help. So like travel nurses, things like that. Because of COVID, everybody's moving around, everybody's traveling. There's not people just like, it's not that there's not people, but there are a lot of people that are in hospitals, care workers. Because, over COVID, there was extra people in there. There's still agencies that are still having these people in there all the time. So these people, they need places to stay. Say they're from California, they're from Arizona, they're from Chicago, wherever it may be. But they're coming down here and they're working at the Broman or the Carl down the street and they need somewhere to stay. I can easily hit up these hospitals and be like, yo, do you guys have any agencies for travel clinicians? If they do, cool. Add me to your list. If you need somewhere to stay for Airbnb, do that. You guys can hit me up. And it's not like I have to furnish these things. Like nowadays are themed. You know what I'm saying? They got some kind of theme going on. They got something that makes it stand out. I don't have to have that. I can have regular furniture. I could have regular old people looking stuff in my house and still get paid because it's not the clinician that's paying me. It's the company that's paying me. It's almost like Section 8 housing when you're working with that. 'Cause with Section 8 housing, the government pays you rent instead of the tenants. So it's really the same thing. It's just, I think it's a lot less risky than if you were to like do Airbnb and actually, theme it out, go for the repairs, get wallpapers that look like the jungle or something like that. And you got it jungle decked out. And then you're making 2-3K a night. It looks good. And, you're still going to make money doing it that way. You're still going to make money, but just doing it the clinician route is just going to be a lot easier. I don't have to do as many repairs. It's, the profit margins might maybe be a little bit better, but Airbnb or just real estate in general, all those things are just, they're blowing up right now, dude.
Yeah, and marketing to businesses is really big. I'm going to be real. If I need Airbnb for a night, I'm going to try to get a deal. I'm going to try to go for something that I'm going to be picky and I'm going to be a hassle. But if you go to a business, okay, what we're trying to do is we're trying to find a place for these people to stay. Right. And it goes on the business card. So it's a decision that someone makes, and the person that's making this decision, the money doesn't come out of their pocket specifically. So they're probably not going to be as picky as to, what's in the unit or picky on price. You know what I mean? So it's right, a little easier to do.
It's definitely a bit easier because they can't be as picky about it. Yeah. They can't be like, yeah, I want this, I want that. They just have to take whatever is provided for them. The way to get to that is definitely with that high limit credit card stacking. You get enough of those 0 APR credit cards and they can stack up to a good couple $100,000 in funding. Actually, that's what I'm preparing for right now over the summer. I'm preparing to get my first high limit business credit card. So I have a small limit business credit card. And business credit is a lot different than personal credit in the fact that you get a lot more business credit out the gate than you do personal. So my first business credit card was $10,000. That I think was enough to push me to the next barrier, being able to get $30,000, $45,000, $50,000 credit cards. So that's definitely just what I'm preparing my credit profile to look like right now, so I can, qualify for one of those.
Right now, someone's coming to you. You got to give them a 30-second inspirational speech or, a little bit of information. What are you going to tell someone right now who really wants to build up their credit? What's that quick little, what would you say to them just off the bat right now?
So off the bat, we want to clean up your credit profile. You want to get any delinquent accounts off your stuff. This is 10 seconds. So you want to get all your delinquents off. That's first. That's going to boost your account anywhere from 100 to 120 points. Then you want to get a starter credit card. That's easy. Anybody can qualify for them. 20 seconds. After you get done with that, 6 months later, you get your first commercial credit card and boom, you got credit rolling. 30 seconds.
We had an amazing episode. I hope you guys checked out our starting a business episode and our investing in real estate episode. Thank you for tuning in. Where can the viewers reach you? With any help, advice, anything.
You guys can go show me some love on my website at thekampmann.com. Just, put a little review down there on the Google. Let me know how I can improve the account and make sure, I can get to you guys a little bit better. I'll be starting a YouTube channel and posting TikToks more, so you guys can hit my link tree in the description and, get to me through those. Thank you for having me on this platform. I really appreciate you letting me come here and teach some people something about finances.
Of course, man. Appreciate you for sharing your knowledge on the podcast. We out.